This is Oleh Ivchenko, head of Pareto Company. We present to your attention a new episode of Pareto Point on the topic of transfer pricing for controlled foreign companies and taxes. In today's episode, the State Tax Service of Ukraine reports a significant increase in the number of conscientious taxpayers. Changes to transfer pricing rules have come into effect in Canada, and the address of the US President to Congress, which influenced the formation of the modern approach to taxation. We will discuss all of this next. Let's get started. The State Tax Service of Ukraine has reported that as of March this year, nearly 9,000 entities have been included in the list of taxpayers with a high level of voluntary compliance with the law. Compared to November of last year, the number of such entities has increased by almost 18%. Information notices were sent through the electronic cabinet on April 1st of this year, and the list itself was published on the State Tax Service's web portal. For taxpayers included in the list, the law provides for certain specific features of tax administration, in particular a personal compliance manager, specific restrictions regarding audits, and shortened deadlines for providing certain consultations. In Canada, Bill C-15 has come into force, a law that introduces significant changes to transfer pricing rules. This concerns the update of Article 247 of the Canadian Income Tax Act. The new approach stipulates that, when analyzing controlled transactions, the actual terms of the agreement will be taken into account, as well as whether they correspond to the terms between unrelated parties. Separately, a rule has been added to the law that ties the application of Canadian regulations to the analytical framework of the Organization for Economic Cooperation and Development. The changes also concern penalties and requirements for transfer pricing documentation. In April 1961, the 35th President of the United States, John F. Kennedy, addressed Congress with a special message on taxes in which he specifically raised the issues of foreign income, tax havens, and the tax deferral of profits by foreign subsidiaries. He spoke directly about situations where American groups, through foreign subsidiaries, intra-group pricing, the transfer of licensing rights, and management payments accumulate profits in jurisdictions with preferential taxation. According to the US Department of the Treasury, this very initiative became the foundation for Subpart F. It can be said that this was one of the early origins of CFC rules and approaches to combating profit shifting. That concludes our episode for today. I, Oleh Ivchenko, and the Pareto team thank you for being with us. I hope this episode was useful for you. If so, please support it with a like and share it with your colleagues. Join our updated Telegram channel, subscribe to our blog on LinkedIn, and read our analytics on the blog. All the links, as always, are in the description. See you in the next episode of Pareto Point.